Hello, my YouTube friends. My name is Adam Kahn, and this is Dividend Retirement, where I work on my journey to rotate out of growth stocks into dividend stocks, pushing towards getting closer to dividend retirement, hence the name of the channel. Stick around, today should be a great video. First and foremost, I want to give a shout out and a genuine thank you to Gen X Dividend Investor for keeping me focused on what my actual goal is, because maybe like a lot of people out there, I tend to just focus on trying to make more money with my account and I don't really go over what my actual goal is and why I've done all the things I have over the past 30 years. There's this recognition as I continue to watch his videos. Now, those of you who don't know him, he only posts about once a week, and he really talks about how he uses his portfolio to generate dividends to live his life. And I always knew, and that was my goal of my account. And I kind of lost focus as it continued to grow. And now I recognize that that's really the direction I want to be moving towards. And I hope you guys enjoy that transition with me. So, lately, that's what I've been working on, slowly selling out of the growth stocks. What I've been doing for my account is I've been using covered calls so that I'm not overly like pushing to get out of things. And in the meantime, generating some of that income that I'm hoping to get from dividends from some of the positions that I maintain in the growth stocks along the way. Now, as always, this is not financial advice. Please, you shouldn't be listening to me, or I think anybody on YouTube for that matter, while I cite a guy I've been listening to. But forgive me that really this is just entertainment purposes only. I am not a professional financial advisor. I'm just sharing the things that have worked for me over the years and going through my journey on it. You really need to do your own research for what fits your goals and needs, and maybe reach out to a professional financial advisor to get the advice that you need when making these decisions. Now, what is my actual goal? And that's kind of what I've grasped at the past 6 months or so, and recognize that my end goal is to have approximately $200,000, maybe a little bit more, coming in passively year in and year out. And I know that that sounds like a lot of money. I understand to some people, and I really don't mean that. The reason I never talk about the dollars is really everybody's in a different financial position and has different goals, and I didn't want it to sound the wrong way. I had a lot of luck when I was a young kid that helped me put in a position where I could save a lot of money. I was a trader on the floor of the commodities exchange in Chicago, trading Japanese yen futures. I think it was pretty lucky that I was, naive and dumb in some ways, because I sure couldn't take on the type of risk that I did back then now. And it just helped me to be in a position where I was able to save up early on. And then over time, the compounding over the years has done really well also. I've had some really fortunate trades at certain times in my life that has helped propel me when, like, it was just weird how you'd get in this tough situation and somehow see something in the markets where I put on a decent trade that just seemed to work out for whatever reason. Now, for me personally, because of my age and that my goal is over the next 3 to 5 years, I'm looking at higher yielding stocks that may not have the same growth potential in the dividends and some of the ones that might actually be better investments. It's kind of why I've talked in other videos about I'm not super concerned with outperforming the market or anything else. My goal is preservation and to have some income coming in. And I don't want to buy any, or I don't want to say any. I don't want to buy too many of what I consider riskier, high yielding investments. Like, I'm sure not going to put in any of the yield max funds. As somebody who's traded options and understands them, I think these are super risky, and it's just not something that meets my goals. I do have I, I'm having a brain fart, but the ticker symbol is PFFA, which invests in private issue. Like, I can't, sorry, like I said, brain fart, forgive that. I like those who get used to me, I just kind of talk through the bloopers because I don't script it out, which maybe I should, but I really do this for entertainment and for me to get my thoughts out. But they invest in the private equity or stock that gives a dividend yield. It essentially pays 9% or so. They have a really high cost to be in the fund, but the fact is, I've owned it for years. They've paid out monthly. They've been really consistent. even that one, I wouldn't want to put too much of the portfolio into just to get the higher yield to reach my goal of income. So I'd really rather be in some of the things that I've been looking at, like Target, which I was picking up when the yield was 5%. Companies that sell things and profit and make money to pay the bills. General Mills is paying the same amount. The only thing that I noticed of lately, in order for me to get that return, is it's forced me to start looking at a lot of the food stocks, and I don't want to be over invested in the same industry either. So if you guys have suggestions of companies paying somewhere maybe 4% to 6%, companies that actually generate income in order to pay the dividends, feel free to put it in the comment section, because I'll be happy to take a look at them and see if I think that they're capable of paying those dividends, where even if they get into trouble, that it won't be such a big deal to continue to make those payments going forward. Um, Now, I did a video a little while back. If I'm able to figure it out, because I've been trying to play on the editing software, I'll put the video right there. I don't know that I'll figure it out. But either way, if I do, I'll put it in there, where I did go over what the stocks that I have in my set it and forget it account. The ones that pay dividends, I don't plan to make any changes to. I might add on to something like a T. Rowe Price or a Prudential that had a decent pullback and they're still paying a good dividend and have the ability to make those payments. There might be some others in there when I go through that are not some of my larger positions that are somewhat small in the account, but things that I want to be invested in. I'll also go over a few things that I'm looking at. MLPA is a stock I've considered putting into the account, that I think they pay around a 7% yield. They are a ETF that invests in MLPs. Is that what they're called? If they're not, just say so. And what I like about that is I don't want to buy a bunch of midstream oil companies that end up paying with K1s and drive my accountant nuts and potentially cost money to have to work on my taxes in a way that becomes a nuisance. MLPA pays a decent dividend, a little bit less than if you bought Hess Midstream or some of the others directly, but it's a normal dividend that's not going to give you the K1s, or just have the distributions that they do that would make your accountant go crazy and yell at you, why do you have so many K1s? The funny thing that's happened in the transition is certain stocks like Verizon and General Mills I'd been picking up recently in my trading account, which makes absolutely no sense. Like, these are not stocks to trade, but I knew that I wanted to transition into these things. And Verizon, similar to like Conagra and some other super boring stocks, Pfizer, which I have in the set it and forget it account, but I'd been selling puts and calls on them, because what I noticed is, even though they're super boring and the volatility is really low, if I started implementing options into trading them, I could push the yield a good bit higher. And it became worth having in a trading account because the actual returns were pretty good. Well, when Verizon had their last earnings and started going higher, I didn't sell as many calls as I typically would, and I just kind of let it go and stuck with the position because it fit my goals for what I want to do with my set it and forget it account. So my attitude is, as I sell out some of the growth stocks, I'll probably sell the Verizon that I have in the trading account, move it to the one that I have as the set it and forget it, so that that account can really focus on those dividends to get me where I'd like to go. It's interesting to me because the market still feels like it's rotating, and I think it's so overdone. But since my goal is to move into the dividend stocks, I'm trying to make sure that I stay focused on that goal, that I don't delve into things like, I talked about Adobe recently and then I took the loss and got out. Now it's okay because it's in a separate account. At the same time, I still want to stay focused on my goal, continue to push towards those dividends, because that's a really nice thing, so that you don't have to worry about it so much and what goes on. And I'm watching this rotation happen, and what goes through my head, and I'll show you how my brain gets out there, is I think it's really overdone. The selling is pushing these stocks way lower than what I think their valuation should be on a lot of them. They have good earnings. They're doing just fine today. Their projections for future earnings are just fine. But then there's this AI narrative that a company like Anthropic is going to come in and disrupt the entire industry and put them all out of business. Now, I don't know how realistic that is. The thing that concerns me about it is, if that's realistic, jobs will become an issue as well, and it'll be a bigger disruption than people are prepared for, and all of it'll just fall on the knees. And I don't want to make my bets placed on that. Now, I still think that consumer staples and food stocks and things that sell items will do just fine. And not only that, here's another reason that even if earnings drop on companies like that, that if they're able to pay their dividend in a scenario where the economy slows down, the stocks could go higher just based on that, and you could see PE multiples expansion. And it not really makes sense as you're sitting there going, geez, the earnings are dropping, but the stock keeps going higher. Now, here's why, and I'll give you the example so that people understand. Take a stock like MTN, which is Vail Resorts. They were paying approximately a 6% dividend yield. Now, I haven't looked at them in a little bit. If the earnings start to drop because people aren't skiing or it's getting expensive and people are losing jobs, but they're making enough money to be able to pay that dividend. Now, I don't know that that'll happen. This is not a prediction. This is just an example as to why I could see some of these stocks continuing to rally, even in a scenario where their earnings are slowing down. If the economy is slowing and interest rates are coming down and CDs get back to the point where they weren't paying a whole lot of money and those high yield savings accounts start to disappear because you know what? The banks can't get the type of revenue they were to be able to pay those high yields. So the interest rates continue to go down. People are going to start looking for avenues where they're able to get that type of yield. Well, by the time they start doing that, when their CDs start to roll, and they're no longer able to get 4%. Now all of a sudden it's 1.5 or 2%. My guess is the stocks that are paying the dividends, that are able to pay those dividends, the prices will already be higher and they will be paying a lower dividend than they're paying now. It's kind of why I'm pushing to rotate into them at this point, and it won't matter if their earnings are worse. If their earnings aren't growing, you'll see the PE multiples expand because people will be striving to get those dividend returns. And if it's a company that's profiting enough and making enough money off of their free cash flow to make those dividend payments, the earnings will be less of a focus, and the amount of money they have in order to be able to sustain the dividends will be more of a focus. At least that's my thought process and why I'm focusing on that stuff now. I understand that when people look at it in today's vision and they have narrow glasses of, if I can make X in a CD, why would I take risk of a stock? And if I have concerns that their economy is going to slow down, I'd rather the guaranteed return instead of something that has the risk of the market. Well, outside of a complete economic collapse, I still think these are good investments because I think those dividends, as long as they're secure, are going to be really valuable in time. So when I was banging my hands on the table about a company about like Target, it wasn't just that I felt like they were undervalued. Now keep in mind where it is now. I am not banging my hands anymore. It's now paying a 4% dividend, which is attractive to me, and the PE's already gone up a little, and I don't see a ton of growth in terms of their revenues going higher and just the stock growth. Like I don't see them as the greatest company ever. The reason that I was pushing Target and banging my hands on the table is I thought they were super undervalued, and they're only using something like 56% of their free cash flow in order to pay what was a 5% plus dividend. That's super attractive to me. Not only that, they had a super low PE on top of it, somewhere around a 10 times earnings. So I saw them as a really safe investment to be able to pay that dividend, because that gives a lot of room that even if their earnings drop and their revenues drop, that they still have a ton of free cash flow to be able to continue to make those payments, which me as an investor is really valuable to. And in a normal slowdown type of environment, well, they should do just fine and potentially even be able to increase their dividend if they wanted to. And depending on what their base of investors need out of the stock, it would leave them in a great position as long as there's normal ebb and flow of ups and downs of economy and not some massive overthinking type of, the world is coming to an end, like there was in some of those movies we've seen, like Elysium, or you go back to the Terminator and some of these. The Running Man's another great one. Not to spew out a bunch of movies, But it's interesting because when my brain really goes wild and I look at something like Elysium, for those of you who watched it, I could see a scenario where the world gets super divided, and on top of it, like the robots are the ones that are the police and whatever else. Like my head can go there too. I just think A, it would take a lot longer than people expect, and B, I have some faith that there's going to be a transition of jobs and people will do other things and there'll be new opportunities, as opposed to the AI is really just going to replace everything and people won't be able to work. I also think that if that were really the case, there would be some sort of UBI where people would be receiving some sort of, whether it's credits or money or whatever it is, to be able to pay their bills and continue along. I also don't think they're going to come around and snatch the things that people have already acquired over time just to equal things out. I mean, I guess we'll see. Not much we can do other than, you know, go about our days and live our lives and make the best bets that we can. Now, any of you, like, really put in the comment section. I'm curious if you have any good stocks out there, especially if they're not in healthcare or consumer staples, specifically food, because I've been searching and I found General Mills, which I really like, and I picked some up. Verizon looks great. What were some of the other? Kraft Heinz, but I already have it. They've taken on a good amount of debt. But these companies are the ones that I've been seeing that have nice dividends, that seem to be able to make those payments and potentially have some small growth ahead. Like, I think Visa's a great company, but it doesn't fit my goal because the dividend's too low. Even if they're raising that dividend at a high rate, uh, it just doesn't fit what I'm looking for, which is why I always say not financial advice, and really you have to fit what fits you. Like, what fits me is going to be different than a lot of people. Now, one last thing before I go on my walk and work on my editing. I actually think I have a really, I was about to go on my walk and then I thought, hey, I'll do a quick video. I'll be able to do the editing on my walk so that I can, what do they say, kill two birds with one stone, which is a terrible thing to do, but that I'd be able to save time and get all those things wrapped up at the same time. And it gives time for the sun to come out and it get a little bit warmer on my walk. Despite living in the desert, the winters get kind of cold. But be really cautious with the positions you put on, because rotations can, and markets, like I always say, markets are markets. Markets can go a lot further than people expect. That's why I'm trying to be cautious about not buying too much of the software stuff, because even while I think it's oversold, that doesn't mean it couldn't have a long way to go. Now, I'm not making a prediction. I'm not saying it will. I'm just saying, and same with the other way, like the dividend stuff that's already rotating. I've seen it in companies like Hershey that once they start going, sometimes they go a lot further than people expect. It can happen quicker than people expect. It's why I'm being cautious with things like Verizon, not to get out of it, because as it starts to go up, maybe now that it's broken out of the range, it really just keeps going, and I'd hate to miss the opportunity of having what I was getting in those dividends. I have one friend that really feels like once a stock gets to a certain price and it's no longer paying the same yield it was, why would I still own it? And we have just different philosophies on it. If I buy a stock at a certain price that's paying a dividend that I'm happy with at the time I buy that stock, it doesn't matter to me so much if the stock goes higher or lower, so long as they can continue to pay that dividend. So if the stock goes higher, while it's nice to see the portfolio value go up, it doesn't matter so much other than if they can still pay that dividend to me. And if the yield is now showing as a smaller yield than when I bought it, well, I still think about the fact that I bought it where I bought it, paying the yield it was at the time that I bought it. It doesn't matter to me if something drops from, say, a 5.5% dividend yield to now a 4% dividend. I don't think of it as I'm only getting 4% because the money has grown. I'm thinking about I'm getting X dollars on the investment that I made, and that was what I wanted from it to meet my end goals. Which way do you think about it? Because neither is correct, or neither is wrong, depending on how you want to look at it. Like, he's not wrong and I'm not wrong. It's just a difference of opinion and something that we constantly discuss and have a battle about. And I'm curious, which way do you guys see it? Do you think of it as yield on cost? and you're getting what you get from the day you bought it? Or do you think when the price changes of the stock, you're getting the yield of the value of the investment that you have in current time? Just interesting philosophical discussion. Anyway, have a great day. To have a great Thursday. Hopefully, everybody's near market highs. The markets have been great. Some things, like we talked about, haven't. But if you're well balanced, I think you'll see that it hasn't really been much of anything. Have a great Thursday. Chime in, let me know your thoughts. New channel, so do me a favor, like, subscribe, all that other stuff. Or don't. Like, I mean, really, as much as I say that half of it's a habit, it's okay if you don't. I hope you get some entertainment value out of the discussions and potentially have some ideas as well, because I find there's some great people on here that do just as much research, just don't have a channel, and they enjoy finance, so they watch some of the stuff. Again, thank you, Gen X Dividend Investor, and some of the others. Like, I watched Ian from PPCIEN or something. He's got good advice, and same with Ryan Williams, and Russ. Like, all these guys. I watch religiously almost Amos from Dividend Compounders with Cheese. I only pick out Gen X Dividend Investor because he kind of keeps me focused on my goal, because I'm kind of like, that's where I am, but I just want to reshift some of the things. So, hope you enjoyed me spewing out my thought process. Enjoy your day. If I don't see you guys tomorrow, have a great weekend. If it does then blow over to the weekend, I got snowboarding on Sunday, so I don't know that I'll have time to do a video, or Saturday. And then Sunday, I think we're planning on hanging out and doing stuff. And I know it's Valentine's Day. I've asked my wife a bunch of times, but anyway. And don't forget, Tuesday, 11 a.m. Pacific time. I know the time sucks. My total selfishness for what fits my schedule. Maybe I'll start doing it earlier in the morning, to be perfectly honest, just because then I can still do my walks and whatever else. And maybe I'll start doing it outside, except it's nice to have the computer if we have some more people show up. I might start transitioning to doing it on this channel. For now, it is on Investing with Adam K. But I really do want to switch the channels. I don't know. Just wanted to start over and make a change. Anyway, again, have a great day. Sorry to keep rambling. These things pop into my head, and I tend to do that. And I'll talk to you guys soon. Bye-bye now.